All right, 10% pullback, pretty simple. The way the name pretty much states it as it is. So we're looking for a pullback in the particular symbol. And when we get that pullback, we're looking to see if we might be a time to buy it. So pullback is a small to moderate drop in the stock price from the recent peaks, and it typically will occur in an uptrend in that particular stock. So we're looking for stocks that have met our conservative pullback target, which is our state 2 target 1. So it's in state 2, a little bit of a pullback, and it's hit its targets 1. So maybe we're looking for a little bit of a reversal and push back higher. The stock has also needed to had a 10% to 25% drop within the past 10 trading days. So if those two signals come together, that's when we're using this 10% drop pullback signal. We've talked about it before. Most times, if you get a state 1 to state 2 transition, then the stock could be a temporary pullback and move back higher and resume its bullish trends. That's kind of what we're looking at. Two signals that go into play here. We're talking about the price drop, 10 to 25%, and again, state 2 target 1 being met. Price drop explanation is pretty self-explanatory. We talked about that. So you can see here, we're talking about, so Etsy had a price drop in September 2020. So we're looking at this little price drop right in this range. So we can see it started dropping in price here, and then our signal would have came out on 9/17. Now we're using state modeling like we talked about. We discussed state modeling in detail. Here's your chart of state modeling from the platform. So on 9/17, 9/17 is the date I used in the time machine. We can see Etsy was in state 2. It had a bearish signal at 110.56. But most importantly, you want to look at target 1 being hit. And we can see target 1 and target 2 were both hit on the same day. But target 1 is what's going to trigger that signal. And it was at 108.28, and it dropped all the way to 104.30 on that day. Here's your example from 9/17 for Etsy. We can see into the studies, the high probability, 10% long back, 10% pullback using the long call, excuse me. All three of these symbols had shown up, but we can see we're wanting to look at Etsy here, and we can see the different parameters of when they were met and what had happened. Entry date for that particular state 2. If I click on the X there, we'll see the trade long call. We're looking at a November 20th expiration, $130 strike, and paying $560 for that option. Now we're also giving you some profit targets here as well. So those profit targets should be based off that 25%. So if you want to keep those profit targets every time, we already put them there for you, and you can put your good till cancel ordered in as long as you get in and as long as you're able to get in at that mid price. So getting in at a little bit higher, a little bit lower than that mid price is going to obviously adjust that 25% profit, but at least it gives you a target area of kind of if you know you're putting in the right order or not, kind of what to look for. So Etsy for the long call, we can see on 9/17 we got into the long call. Stock was at 109.23. We bought the November 130 call at 560, and about 4 days later, we sold it for 772. So we were able to take our profit. Stock went from 109 to 116, and we were able to get out of that trade. The bull call, similar fashion, 9/17 entry. We bought the November 85-110 call spread. Again, stock price at 109, selling the option that's almost right at the money to collect max premium if we can do so. And then, on 9/30, so 13 days later, I don't know how many trading days, but 13 days later, we sold the spread and we were able to get out for a $346 profit. So we paid $15.62, got out for the $346. Bull put, we sold it at the open. So on 9/17, we sold the 85-75 put spread, and we collected 175. So again, the most we can make on this trade is 175. So what we did was we actually looked to get a certain profit on the trade on 9/30. So again, 13 days later, we were able to close the trade out, and we were able to collect that $88. So the most we can make was 175, but we ended up closing the trade out and collecting the $88. So we closed it out, for what is that, about 90, $88 or so, $87, excuse me. So we paid $87 to exit, and we kept the $88 profit. All right, so then our long call, the entire strategy results since January 2018. Long call, $40,000, 1.87 profit factor, 76% win percentage, 323 winners, 102 losers. I like to look at that to kind of get an idea of the total count. We can see this equity graph here is pretty choppy and it's big spike up. Again, I like it, the fact that we're making money, but we kind of want to see if we can kind of smooth this graph out. Bull call is a little bit better. I mean, in the fact of a little bit smoother, gradual to the upside, but still a big drop and spike here. $70,000 profit, and you're looking at $1 or 192 profit factor. A lot of things I like to look at too. I just want to go back to the long call real quick. As I look at my average risk on open, so that'll tell me, is this trade maybe too expensive for me on average or not? If I do average for the long call, 550 bucks. The bull call, since we're buying those options, buying those spreads that are almost completely in the money, we're paying a little bit more money, where our risk is a bit higher, 1830. But if that strategy on the bull call is not matching with what you typically like to do, feel free to adjust it, use a different strike selection model, and maybe you can drop this risk down. But be careful, it might drop your win percentage down and your profit down as well. So, always take those things into consideration. Bull put, we're looking at this one's pretty steady. If you're looking at a bull put, I mean, we have some big dips here, but taking those out, you can see that we have a pretty good incline. 13,000 profit, 1.49 profit factor, 88% win rate. So great win rate with that one. And again, these trades are good, risk to define. So getting in, what the max loss can be on that trade. You also know what your max profit is as well. So that's that. Okay, Josh has responded to that in the box. So we got that. So any questions on the 10% pullback?